Right, we are live. We have liftoff. So let's go. Okay, where are these markets going? What am I buying? What am I selling? What is my view of where we are all heading? I'll share that with you, and then by all means, talk to me about what you are seeing in the market and what you think is going on. So first off, I've learned over many years that what the Nasdaq does, the rest of the market tends to follow. So hence the reason why I've started by showing you the Nasdaq. And the Nasdaq is sitting in January 21 resistance. So this is a daily chart of the Nasdaq showing you the relationship of last year's price action and this year's price. So all the highs, most of the highs sold last year. So we kicked up the 22, we came into January and just sold. February and May, sell in May and go away. Well, that was absolutely smack on last year. August drop off, rolled into the end of the year, and then we just turned around. They just bought it up. And then we unraveled all the selling that we had last year. So this dip got bought, and so on, until that we're back up to the drop zone, very close to we're in that zone from last year. Now, things to note on a technical level, this is the 150-day average, and we are some distance away from it. Once you get some distance away from 150-day average, you tend to, markets fall back to the mean, don't they? That's what markets do. So this market is looking like it might want to drop in the foreseeable future. And given that we are in probably one of the quietest months of the year, or just about to enter the quietest months of the year, it stands to reason that we will probably see some kind of pullback in this month. So if the Nasdaq fails to break above this little high and we close underneath that 20-day average, in other words, come out of this little triangle, then that could see us drop right back. The Dow, in contrast, is doing pretty much the same. We are hitting the same resistance levels from last year. Only these are levels from March and April, February, March, April last year. So same applies. We've sat up very well, but we are some distance away from key averages now. We're even some distance away from the 20 on this one. Bear with me a minute, my throat is dry. So be warned, we are sitting up, but we are vulnerable. Now, what I am short is this FTSE. Any market that can't close back above the previous year's high is very bearish in my book. Now we are just toying with last year's high, literally right now, within a pip of last year's high, and we have these topping tails on this chart with Bank of England on Thursday, highly likely to increase interest rates. I can't see how they can avoid, given the very high inflation that the UK is still suffering and is likely to suffer. So I've been shorting into this resistance. If we stay underneath 76.90, then I'm looking for this to peel right back. If we start to close above it, then I will back off and leave it alone. All right. So let's have a look at the dollar next, and then we'll quickly move on. Dollar is sitting up This is a dollar index, so heavily weighted to the euro. We're not able to come and meet that trend line. So if this dollar fails here and rolls back over, that's good for the US and not so good for Europe. The reason is that a lot of European FTSE and DAX companies trade in the dollar. So one of the reasons why FTSE and DAX has held up so far is because of the strength in the dollar. So watch out, wherever we fall out of this pattern is going to be the trend. My feeling is that the dollar will pull back and start. We've got a lower close here on Friday. Non-farm payroll, it's monthly jobs on Friday as well. So it is a busy week with UK rates on Thursday and US monthly jobs on Friday. So what I have been doing, I've been selling the FTSE and buying the gold. In my group, my day trading group, I talked about buying this 1945 last week, and here we are at 1972. This is convergent to the dollar, so that makes me think that if the dollar stays up and this stays up, that's a big fear signal to me. If this sits up and the dollar rolls over, that's bullish, and the normal divergent relationship is in place, and I would expect this gold to break up. So I'm looking for this gold to break up, and I'm looking for it to break up, crack through 2000. It may hesitate there, but go back to the highs and beyond. However, if we close under this 150-day average, then obviously this is going to roll over. And this is going to drift back to 1850. There is a gap down here even. To my mind, that this gap has not been closed. So that's not to say it's going to be closed anytime soon, but it will be closed at some stage. Right, so I'm selling the FTSE, buying the gold. There's plenty of time to buy the gold. If you see, ideally you need 1950 to get in this, but it's so bullish now. 1960 is entry point now, I think, with a stop under, at least under today's lows, if not under that 1935. Because I don't think that's going to pull back any further, much further than that, but I could be wrong. Volatility index is low, so that suggests it's still a risk-on environment. But if this perks up, this is a key indicator, the VIX. If this VIX does perk up, then hold on to your hats, particularly if the dollar perks up as well. But at the moment, I'm not looking for that to happen. Right, stocks. Stocks I like. Get my little book. I like energy and miners. Let's look at miners first. Talked about PAF for a long time. I think this is back in play. That dip down into 12 has been bought. We're currently 14.5. I think you need to buy 14 now if you want to get in this, because if I'm right, then and we close above, we can break this recent high, then I think that can that's an expansive triangle. I'm looking for that to climb back to 20 plus. We've got to close above 15p for this one. So this is a tishy one. Let's have a look at Hochschild. We are getting very nice pattern, higher closes, and the volume is increasing here. So I think Hochschild is good for 75 with a stop under 70. Look out for look out for that to break through 100 and go back up to 110 plus. If I pan back from that, you can see how it has been up as high as 135, 150. So I'm liking Hochschild. I like the Pan-African. Other commodity related, Sylvania, that had a buy signal there last Thursday, and we're still sitting in the buy signal. It might dip back a little further. You might see 67, but the volume is increasing. I like Sylvania a lot. Let's look at anything else you want me to look at on the minus side. A couple of US ones. That HL is perking up. That's a cheapie as well, so that's viable at 570. You may get a lower close on HL. CD, the silver miner, liking the silver miner CDE. We look at copper miner, FCX, a US copper miner as well, staying on with the subject of US. So look at this copper miner. FCX is storming away from 33 up there to 45, close to 45. So the UK miners, UK quoted miners could play catch up. All right. Let's turn to energy. iGas. Keep a very close eye. I'm keeping a very close eye on natural gas at the moment. This iGas is very, very, very volatile. This went from 12.5 to 110, and we're right back down to December 21 lows at the moment. Very speculative, so back off if you don't want to speculate, or just Tullow. Called Tullow a while back. I think this you might see 30-32 again. That might need another pullback, but the volume is increasing, and we are closing higher on Tullow. PFC or services. We had this huge big push up here on the 30th of March. We've never broken out of that 30th of March level. If that pulls back to 70-71, I think that's viable. Low volume at the moment, so be careful with that one. GKP. That is coming up in volume. That looks good. I would try and hold out for 115, 118 on that, with a stop underneath 110. So look at your Square. Yeah, wow, Square's coming up again. Hunting might peel back to this big 6th of July bar. Not showing any willing at the moment. I would set an alert for a deeper pullback to 225, 230 on that. That's 260 at the moment. Be patient. I don't chase. So look at the big boys. BP. Yeah, I talked about wheat and corn in a minute, definitely. BP is sitting up, and Shell likewise. So I'm liking the GPs and Tullows of this world. I haven't got, where's Harbour? I'll come back to that. Let's look at basic materials, following on from what I've been saying. So Elementis is perking up some. If you want to speculate on that, try and wait for 105, 107. Man Group. Look at the volume recently on Man Group. That is very encouraging. I would try and wait for 220, 230 on that. Again, don't chase. TPI cap is low volume. I do like so that may mean a deeper pullback. Yeah, I would, that's very low volume on that one. And moving on. In contrast, let me look at retail. So let's look at some Tesco. Look, that with the volume and that chart, that looks as if that's not happy up there at all. I can see that coming down to 245 at the moment. The highs keep selling on that one. Sainsbury's. So far only retraced to the 20-day average, but wow, that looks as if that's had enough up there. That looks lower to me. Card Factory. That sold at 113. That looks lower to me. I think it's a good short. If we can close underneath that, it's 90. I think that's going to start to peel right back to 50. Let's stay with the big airlines. IAG. Wow, they're busy. They're getting busier. Surprise EasyJet. If we stay above this 448, I think that can recover. The volume is beginning to pick up, but I would jump ship if that got below 438. I would not hang around if that got. It's not a great chart. I think I would rather buy that with a close above 460 than buy now, for fear of that touching the low and going lower, keeling over. ABF at the moment looking lower. So the retailers are still selling on any lift, any rallies. When I say rally, I mean, look at this. ASOS is just a dead duck. I mean, look at this. It was not that long ago. It was 59.40. We're less than three, and we're under £4 here. Is that right? No, we're just over £4. That's pathetic. However, if you're looking for a recovery stock, that we are seeing better volumes here. Volume is divergent down there. In other words, the price was drifting lower with the volume coming up. So I can see the volume is keeping up here. If that gets above 450, that might be a recovery stock. But I'd much rather go into the miners and the energy at this stage of the cycle. And even TUI, let's have a look at TUI. Wow, even TUI is picking up. Right, the other stocks I like. Let's look at Centrica. Centrica's been on a great run. I am in Centrica by default. In other words, the stake I'm unraveling has a big stake in Centrica. And that is still looking higher. That's going up on volume. This is what you want. You want a stock to go up on volume. So there's still reasons to buy that dip. Yeah, well, I mean, if you want to, I'm drawing to a close now. I just want to look at a couple of commodities, and then if you wanted to ask or chat, that's fine. Yeah, but the meetings tend to be like this. I tend to do a presentation and then open it up to discussion. Corn. I actually bought some corn today, but I'm looking to add to it. I look as if I'm in too quick because this is still closing lower and the volumes are poor. So it looks as if we may come down to these lows again at the moment. We actually gapped down, so let's see. I keep promising to do a London event. I know I keep putting it off, but I all I can say at the moment is I am much closer to doing a London event now. Just had I keep thinking my desk is clear and it's not. I would very much like to do a proper face-to-face event. Yeah, wheat is. I mean, well, it hit a lot of resistance. So from the February drop, we were not able to get above 79, and we're coming down on volume. So at the moment, that still looks lower. So I am very bullish on these commodities, but they're not doing what I want them to do. So I've got to be very cautious and sit on my hands more at the moment, because so it looks as if wheat wants to come and find 660, if not lower. 650 will be at 630, 650 will be an obvious number. We're getting higher highs and higher lows. But we had a higher high over here and a higher low over here. So we do seem to be building. We were certainly building at this point, but complete failure to sustain this $7, 7 cents, 7.25. I thought we'd be up here by now. I thought we'd be over 750, maybe more, and here we are, $6.89. So looks as if we want to come and sit into this trend line. If that's the case, then I will be a buyer, but at the moment, yeah, obviously there's no reason to buy that at the moment. Right, anybody got any questions? Anybody want to talk about their views, their vision of the markets? Anybody want to talk about a particular stock or a commodity? I can see the US is still drifting lower. Otherwise, I'll just close up and fade away. So 45.78 on this S&P. So, I mean, this is, last Thursday was actually a sell signal. New high, immediate close lower on volume. So unless we start closing above this 45.75, this S&P is already showing that it's got a problem. We've had some sell signals like this before, and it's overridden them or just created a pullback. So at the moment, I would suggest that this can come back to that 4,500, and if that holds, then that could be a good place to buy. Right, you're very quiet. I don't think I've got. Let's have a look at oil just before I go. And this is one of the. So this is one of the cleanest commodity charts out there. I mean, I'll show you some fantastic charts before I go. Where's OJ? I mean, look at OJ, orange juice. This is just a complete runaway. So it looked ill in May. It looks as if it's going to roll over in May, and then you get a buy signal. New low in this little run. Close above the 24,150, and then we're up at there at 28.6 in no time. Again, looks very weak down here in early June. Looks a bit pathetic here, late June, and then it just fires, absolutely fires. So that's why I'm very focused on commodities at the moment, not concerned about the wheat and the corn, but just keeping very, very close eyes on it. Soybeans. So all the grains normally, soybeans, wheat and corn normally work in unison. it's very, very rare for them to be out of sync. The beans did get out of sync in that run up to in July. In that it did a much higher high than the wheat and the corn. Good question. Pound US dollar. Before I do that, let's just have a quick flick through the commodities. I'm very much looking to buy 24.40 on the natural gas. This is the time of year to buy natural gas, when everybody's nice and warm and on the beach, ignoring the gas, hopefully. Copper. Very bullish move up on the copper. Wow. The demand for electric cars is so high. These copper prices, you can see why SCX copper miner is doing well. Cotton. That's an interesting chart. That's very range bound, but these box plays can really take off. Right, let's look at the pound US, then I'm off. Yeah, I think this this pound does look viable at the moment. Yeah. We've got to close above the 129. There is a lot of red on that chart. And all we're doing at the moment is pulling back into this Thursday drop. I mean, if the Bank of England do something unexpected, like a higher than 25 pips base rate rise, then that could send this up. But a strong non-farm payroll could sink this. So one scenario is we could pick up into this resistance on the back of BOE, and if we close underneath there, then we're going to pull down. Sorry, to cut a long story short, and to answer your question, I would buy dips, but I would keep a stop underneath these lows and get out if we broke this recent Thursday low. Let's look at the weekly. I don't trade Forex. Would you consider yourself a Forex trader, Patrick? I think you're just a general, you go with the best charts are, rather than, you do more Forex than others, don't you? I can't remember. You've certainly done a certain amount of Forex in the time I've known you. So weekly bit of Forex, right? Now it's definitely a huge amount of support here. The volumes are tailing off. I think it looks lower, but it's so I think if we bump into that, close to that 129, 130, I think that could roll over. Why? Because we got a big sell bar on the week beginning the 17th. We've got lower volume and we're underneath the 150-day average. So it could be if you sell into any push up on if there is a push up into those levels on Thursday, that could be potentially a good opportunity to sell, and then we get back to this downtrend that we had since May 21 and bottomed out in September 22. And let's face it, the US economy is a lot stronger than the UK economy. but inflation is higher in the UK than it is in the US. So the market at the moment doesn't seem to know what to do with it, or certainly over the last couple of weeks. Well, it does know what to do with it, isn't it? I mean, it's pushed up and then sold. So yeah, any further push up into that 130, I think is probably potentially a good short. Let's go back to the daily a second. Yeah, a push up into that triangle could see that sell and roll over. All right. Thank you for joining me. I can see the markets have picked up a little bit while I've been talking. I will update you during the week, but liking gold, miners, commodity related stocks. Don't like anything to do with retail. Don't like any exposure to the consumer, and certainly not housing. I'm looking for the oil to continue higher and gold to continue higher, and focused on corn and wheat, watching what they're doing very carefully. Right, thanks a lot, guys.